The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome, everybody, to Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks, and I'm here with two more stocks to put on your aggressive growth stock radar screen. And let's just get right to it as we see the first one already up here on the board. It's Lululemon Athletica, and that ticker is LULU, Lulu. It is a Zacks rank #1. That means it's a strong buy. And it has the growth and value divergence that I love to see. That is an A for growth and an F for value. And that tells me right away that I am on the right path in looking for a growth stock, because growth investors and value investors are looking for different things. And that's what's going on here with Lulu. Obviously, it's all about the growth here. Let's jump ahead and take a look at why this is a Zacks rank #1. First, we can see the beats. Very good beats here. We got a beat and a beat and a beat. Although the direction is moving a little bit lower here over these last few beats, the positive average surprise here is still up around 20%. And as we look at the key as to why this is a Zacks rank #1, obviously beats are important, but estimates are more important. We see a little trickle higher in earnings estimates here, a couple more pennies here for the next quarter. But here's where we see like that big move, that 439 to 462. That's that real big move that tells us that in the next couple quarters, and we look forward towards the holiday selling season, that's when analysts are saying, boy, this is going to be big. And I do have to say, well, let's take a look at the chart first. Then I'm going to go ahead and tell you all about my personal Lululemon experience. Well, let's look at the valuation. I had the valuation up, so let's take a peek at it. A little bit rich, 36 times forward numbers, 43 times trailing. You still get that 25% growth there year over year. The price to book is pretty rich at 15 times, and sales kind of rich. But I like the valuation because they keep on beating. The growth is there, keeps on moving forward. If we take a look at the chart here, obviously this stock, like a lot of others, came in quite a bit between the start of the fourth quarter there and then right around Christmas time, but has since come back up, and you've regained all of those losses. So my personal story with the Lululemon is that I got a pair of their shorts not too long ago, maybe it was last summer, and I loved them. I found myself in them all the time over the Christmas time horizon. I got some more shorts, so I traded them in and got a pair of sweatpants that are the softest and greatest sweatpants that you've ever had, that I've ever had. They're super expensive. There's $128 for a pair of sweatpants. I wondered myself what was wrong with me when I bought them. But another pair of pants too that I kind of live in. So I got two pants, not full-on dress pants, but they're kind of like a jogging pant, I guess, not a full-on sweatpant. But two of those things, both were $128, both super expensive. Both I'd be willing to buy for more right now. If I needed more of those and I knew how great they were, I would buy them for more. So I think that the male component, the male shopper for Lululemon, will be the big driver for this stock going forward. So keep Lululemon on your aggressive growth stock radar screen. All right, next up, we've got SailPoint Technologies, and that is SAIL as the ticker. It is a Zacks rank #1, a strong buy. It has an A and an F, just what we like to see. Now, SailPoint is in identity management, and we lump this in with cybersecurity in a way of speaking. It's down quite a bit today, right now, -4%. A lot of the software names are getting hit right now as we speak, as this video is being filmed, but that has a tendency to shift and to change throughout the day and or week. So let's go ahead and take a look at why this is a Zacks rank #1. So kind of the same here, a little bit different here. So we see this penny shifting to a loss. So that's really going the other way. But this loss of a penny going up to 2 cents. Oof. My skills with the pen are not that good. This is moving much higher. So again, the back half of the year, try to make that more of an arrow. The back half of the year is looking that much better. Next year, visibility isn't there, but we're tickling higher. Big beats, as you can see, 700, 200, 100. Average surprise here, simply excellent at 307. But, you know, it's all about what are you paying for it. And this is a stock where you are really paying for it. You're paying for that big probability of growth here. 102 times earnings. But again, that's coming off, the current low levels and looking forward to this year into next year. 19%. I'd like to see that just a little bit higher. Price to sales here tells me that we're in a good spot. 10 times. Price to book, though, tells me it's kind of cheap at only 6 times. We look at that operating margin, and we can see that that's moving higher. I want this net margin, though, to go from, oh, boy, bad with the pen, to go from negative. It looks like that's about to flip positive here, and that's what we want to see. If we take a look at the chart, it's a newer company. We can see that things were really good, looking really good anyway. And then that quarter, that fourth quarter came in, everything went down. But now looking good, coming back in a little bit. But I would expect to see something like this and a move back towards your all-time highs up around that $34 range. Well, that's it for this week. Be sure to join us next time as we take a look at 2 more stocks for your aggressive growth stock portfolio.